So, what if an AI could analyze one of India's biggest banks and tell you exactly what to do with your money? Well, today we're putting that to the test. We've got our hands on an AI-generated investment memo, and we're about to tear it down piece by piece to see how it built its case for the Bank of India.
Okay, so this is it. This one document holds the entire analysis of a massive 67,000 crore rupee company. And the question it's trying to answer is huge. Should you buy, sell, or just hold on to shares in the Bank of India? Everything we need to know is right inside.
And boom, here's our first big clue. The AI's final conviction score is a 7 out of 10. Now that's not just a passing grade, that's a pretty confident buy recommendation. But the real question is, how did it get to that number?
Right, because a number is just a number, without the story behind it. So for the rest of this explainer, let's you and I put on our detective hats. We're going to follow the breadcrumbs of data right through this memo to understand the logic, the conflicts, and the final call that led to that 7 out of 10.
First things first, let's look at the strongest evidence. These are the building blocks, the high scores that really form the foundation for that buy recommendation.
And we're starting with a big one. The highest score the AI gave was a massive 9 out of 10. This is the absolute cornerstone of the positive argument. So what's it for?
It's all about valuation. Basically, the memo's number one point is that this stock looks cheap. With a price-to-earnings ratio of just over 6, the AI is saying, hey, for the amount of profit this bank is making, the market just isn't giving it enough credit. It might be a real bargain.
But look, a cheap stock isn't everything, right? You also want a good business behind it. And that's where the memo hits us with another really strong score, an 8 out of 10. Let's see how this builds the case.
And this one is for business quality. The memo points out what it calls a narrow moat. That's like a competitive advantage that's hard for others to copy. For Bank of India, that moat is its strong brand and its massive network of branches. This lets them bring in a ton of customer deposits, and crucially, they don't have to pay a lot for them. It's a stable, low-cost foundation.
And get this, the business isn't just stable, it's actually speeding up. The memo found provisional data showing that their loans, or advances, shot up by almost 16% in just 1 year. So now you've got a business that's cheap, high quality, and growing faster. That's a powerful combo.
Okay, so the argument for buying looks pretty solid so far, but a good investigation always looks at the other side of the story. So now, let's dig into the red flags, the low scores that throw a little bit of a wrench in the works.
And our first one is a 5 out of 10, right in the middle. Not a disaster, but it's definitely a yellow flag from our AI analyst.
This is the forensic score. Now, to be clear, this doesn't mean the memo found anything shady in the accounting. Nope, it's really just a flag for missing information. The AI couldn't find public data for a few specific things, so it played it safe and gave a neutral, cautious score.
All right, and here we have it, the single lowest score in the entire memo, a 4 out of 10. This is probably the biggest piece of evidence that contradicts the buy thesis.
And it's the technical score. So, while fundamental analysis looks at the health of the business, technicals are all about the stock's price chart. And right now, that chart doesn't look so hot. The memo notes the stock was actually downgraded to a sell candidate, suggesting that in the short term, the price momentum is pointing down.
And this slide just lays out the central conflict perfectly, doesn't it? On one side, you have the long-term story, a strong, undervalued business. But on the other, you have the short-term picture, weak price momentum. So which one do you bet on? The company or the stock's recent performance?
Before we answer that, there's one more critical piece to this puzzle we need to look at, the people in charge. Can we actually trust what the management team says they're going to do? Well, the memo runs a little credibility check.
And here, the AI does a simple what they said versus what they did comparison. It took management's specific promises on profits, on loans, on deposits, and then it checked the results. And as you can see from all those green check marks, they didn't just meet their goals, they blew past them every single time.
And that leads to this absolute knockout punch in the analysis, a guidance reliability score of 100%. Based on this data, management has a perfect track record. That is a huge vote of confidence, especially when you're trying to decide if you should bet on that long-term story.
All right, we've got all our evidence on the table. The strong fundamentals, the weak short-term chart, and a super reliable management team. So let's get to the final verdict and see how the memo puts it all together to make its final call.
So here's the key takeaway. The AI resolves that central conflict by making a judgment call.
It decides to give more weight to the long-term fundamentals, the attractive price and the quality of the business, than it does to those short-term negative price signals. It's a clear bet on substance over temporary market sentiment.
So, with that logic, the memo lays out three possible futures. You have the bull case, where strong growth keeps up and pushes the stock to 200 rupees. Then there's the base case, where management just meets their own goals, which targets 179. And finally, the bear case, where things go wrong and the price could fall to 116. And this chart really puts that into perspective. It shows you the risk versus the reward from where the stock is now. In the best case scenario, you're looking at a potential upside of over 36%. In the worst case, a potential downside of 21%. So while there's definitely risk, the potential reward is just so much greater.
And it all comes together in this one single idea, the one-line thesis. This is the entire argument boiled down. The memo is saying that the market is sleeping on this bank's performance and improving health, which means it could be ready for a big revaluation.
So there you have it. We've walked through the whole AI investigation, from the high marks on valuation to the red flags on the charts and the final judgment call. The memo makes a very clear case for a buy. But the final question, of course, after seeing all the evidence broken down, is what does your analysis say?